Welcome, Armor Insiders, to the Uranium morning meeting. Hi, I'm Brett Rosenthal. How you guys doing? Virtual hedge fund, our morning meeting, getting ourselves ready for the trading session, going over how we're going to attack the stock market first. So stock market investing, what's the trend and what are we on? Stocks to buy, stocks to watch. We're going to go over both of those categories. And we're going to go over the highlighted group today. It has to be uranium. So we'll go over different price charts expressing what's happening in that space and what we may be doing today on our trading desk. So as always, please remember, you're the portfolio manager on this desk. You got to take the information you hear here and everywhere else, figure out your strategy, execute it based on risk tolerance goals, be the smart money. Okay? So before we dive into this chart pattern, which is the weekly chart pattern of the uranium miners and the daily chart pattern of the uranium miners, let's start with the indexes because everything drives from the indexes. And so the strategy here at the ARMR Virtual Hedge Fund is to start with our risk monitor. When we get risk monitor green, we put capital to work in indexes. We use double or triple the indexes to create the performance we need. And you could stop right there if you want. You don't need groups. You don't need individual stocks. You could just trade those things and outperform the markets in a meaningful way. But what we like to do on our desk is manage capital in three, let's call it four distinct baskets or categories. Our growth portfolio is broken down into three. Our carry trading portfolio, we go to bed every night. U.S. Treasury bills, 5.5% yield we're collecting, come in every morning, look to trade triple the S&P. We captured another trade yesterday, on the S&P, I'm just going to show you real quick what that looks like. If I can get this to work. I'll show you what that looks like real quick. What's interesting, and here's the chart of the S&P, SPXL. So market gap down to prior day's VWAP. This is the 3-minute chart you're looking at. All right, so it gaps down to prior day's VWAP. Holds that VWAP location. We get long in the green box here as it breaks above the opening range high. And we traded it a couple times all the way up to our primary target, which is going to be always the ARMR average true range high of the day, the average true range high of the day. And as you can see, it goes right up to it, messes around with it, and backs off from it. So what we're doing is capturing this opportunity in here. Okay. This is what we're trying to capture every day. Some days it's a total and utter skyrocket like it was the day before. But we captured that green move, okay? And then, of course, the day before, it was so big the move, it goes off the screen. And we have to pull it off, pull it over here, and we can look at this day where we had, probably the biggest day of the month that we'll see, where we captured that entire move. Okay? So first thing we do, ARMR carry, we're going to look for another trade today. We've made money on 5 out of 6 trades this year so far. Portfolio's up 3%. In principle, and we're collecting yield and we have no risk overnight. Boom, that's part of the portfolio. Second part of the portfolio, we're going to focus on ARMR algorithms for swing trading purposes. We have day trading algos, swing trading algos. Risk monitor went green in the risk in the dark green box right here on the 2nd of November. First leg of the rally was unreal. It was a 9-week explosion. Okay. The macro fund is focused on double the S&P, double the NASDAQ, double the small cap index. And then every now and then around that, we'll do something like an ARC. We might have some an ARC position like we had in the first 9 weeks of that run, book to profit there. Right now, what we're doing to augment that success is we're putting on some leaps in 3 of the hateful 8 that we like. Okay, so we added some Microsoft leaps yesterday. That looks ready to rock and roll right there. We're already having a big move in our NVIDIA leaps. We added right on the 50-day moving average and they popped. So we booked a little bit of profit on NVIDIA and Meta, both of which we bought right on the 50-day moving average, and they've rallied. So we've taken a little bit of those gains off the table and we've rotated them into the next of one of the hateful eight that seems to be about to join the fray. And this gets me to my comment about the stock market right now. We had a 9-week explosion. We've had really since that 9-week explosion, right through that 9-week explosion, that was actually shorter than that. The market ripped higher until it reached our primary target, which is this green dashed line here. So now you're looking at the chart expression of the ARMR algorithm for swing trading. We got long in the gray box here. Okay. The target when we got long was the green dash line. You could see it went right to that line and then has paused since December 14th, trading around that line as it catches its breath, looking for the next entry point. And what I shared with you on Monday is there's 3 scenarios the market's playing out right now. Either we're going to have a high tight pennant forming right up here, and that pullback to start the year is all you're going to see. That'll be the only opportunity to get long before it breaks out again. That's scenario 1. I favor that scenario because when you get a rip off of that buy signal where you just get an explosion in 9 weeks and straight up, that generally doesn't end and crash. It usually has follow through. Okay, so even if you want to be bearish, people are going to call the top all the way up and they'll be right sometime in March. I mean, that's just generally what this looks like. Okay, but I give you 3 scenarios because we read and react on our desk. We're not out of the woods here. The market breaks down at the end of the week, takes out the lows of the year. We'll be defending capital aggressively. So the way we put capital to work here after a correction, in this case in time since December 14th, is that we begin by building up our index position again. So we cut it down near the highs of the year and we added it back now on the moving averages. So we cut down our position. If we look at the S&P as an example, we cut down the position on the 28th, which was literally the high of the run. And we added it back on the 25-day moving average with a stop right there. Market breaks down below that, we'll raise cash and get it defensive again. Until then, I lean towards the market moving higher, and I'm looking for a strong close to the week. If we get a strong close to the week, chances are there'll be a follow-on buy trigger from the armrAlgo, signaling the next leg up in the market. Doesn't have to happen that way. Market could go sideways for another couple of weeks. So it's not like a bad thing if it doesn't happen. I'm just showing you the scenarios. Scenario 1, which is in the midst of playing out, is that we get follow through by Friday, follow on buy trigger, the next leg up begins. Scenario 2, we stay in this range and keep flip-flopping for another week or 2 and then break out. Scenario 3, the market breaks down. We're just going to read and react to what we've got. But right now, we're fully invested in the macro fund in our indexes that are twice the performance with some of the leadership around it. Now, I keep reading and just look at the leadership. Look at the chart patterns of the leadership. All right, we already looked at Meta. The buy signal in Meta was down here. We got on that early. Okay, at the 50-day moving average, and it's been leading. Okay. We picked off NVIDIA on the 50-day moving average, and it just took off. We're adding Microsoft. Didn't quite get to the 50-day. Nice double bottom right there at the 25-day. That's a real leadership. You could also, jump down and look at, Google looks primed to go. Amazon's looking like it's about to go. Okay. And so what I read when I look at all of these things, and what I keep reading in, wherever you want to look, is absolute drivel about the Magnificent Seven that sounds something like this. Magnificent Seven market cap is now greater than that of the entire stock market of Canada, Japan, and the United Kingdom. The market cap is over 4 times bigger than the entire Russell 2000. I read stuff like that, and I think it's meant to scare you. It's got this innuendo of danger. Total and absolute drivel. It seems like people are more interested in howling at the moon than riding the king tide. And those people will always be out there. Here's something I can tell you for a fact about the mechanical bull market we're in. We don't know when it's going to top, but those people will be calling the top all the way up. When the market finally goes down, they'll crow as if they told you something, none of which is helpful. I can tell you that for a fact. I can also tell you that bull markets need leadership. The leaders have to keep leading. They keep leading, rest of the market follows, and we can start looking for other types of investments. And here's the third thing you could take to the bank. When the big cap leadership starts to fade, it's not some altruistic DEI moment where people decide to start investing in the rest of the market. It's the top forming. And you might get a blow off in some of the other names, but it's at the end of the bull market cycle, not at the beginning. Those are some facts you can take to the bank. Okay. So, the third portfolio, and by the way, this is why I've read so much of this swill that I've added personally Netflix to the other 7 names, and I call it the hateful 8 because it's just so much hate about how great these stocks are doing. It's not really a surprise. An unreal amount of money is run passively in indexes. This is simply a flow of liquidity, people. That's all it is. Liquidity is flowing. Stocks, the leadership stocks go up. Let's don't overthink it. Don't make it more difficult than it is. Add Netflix, call it the hateful 8 so you understand why people keep complaining and just forget about it. It's just noise to get you off the bus. Okay? But let's get on the bus now of uranium. Okay? I want to show you these 2 charts because they're just so dynamic and interesting and opportunity filled. So step by step, we day trade the index. We initially, after a correction, which has been in time recently, we load up on the indexes. That helps us earn the right to take more risk. Risk monitor is green all the way through this, but we get that follow-on buy trigger, and that's when we take the last 25 to 30% of our capital, which is in cash right now, and put it into work into other investments. And I submit to you the number one investment at the top of the list right now has to be uranium. This is what's been going on to spot uranium over the last few months. And you can see it's just walking up a straight line. And this is what's been happening to the stocks. They've been consolidating in a cup and handle pattern that broke out yesterday on volume. It doesn't get more clear than that. And for those who are concerned, they're late to the party. I don't know if that's you. It's certainly not me. But for those concerned, here's the weekly chart of the uranium miners. And I choose URNM. That's my favorite way to play it. URA, URNJ. You could trade all of them. This is the way I like to do it. And I'm going to choose one asset and put on a position size that expresses my opinion. But that is a perfect cup formation on a weekly basis that hasn't broken out yet. I mean, it's about to break out. And what you've got here is a nice little cup and handle on the daily chart. Which is right in here, right? Nice little cup and handle that's just now breaking out as volume comes in. Okay. So you look at those 2 charts. You look at that chart, and then you look at SRUUF, and you say, wow, right? Uranium physicals leading. The mining stocks took a break, and now they're about to go and catch up. CCJ is the gorilla in the space, as Ares would say. You could buy that right off the 50-day moving average. Every time it gets there, it starts the next leg up. It looks like that's about to go as well. So those would be at the top of my list of stocks to buy if I begin filling out the rest of my portfolio. It's a big if because I need to see the market continue to grind higher so I feel confident the low is in for the year and the next leg up is started, and then I can start taking more risk. I may look for day trading entry points this morning in uranium, put the positions on if we're making money, hold them overnight. If we're not, cut them out, look for the next day. But those are the stocks that are at the top of my list to put into a portfolio. And rounding out the stocks to watch list, I think semiconductors are a place to watch with NVIDIA leading. So we booked a profit on SOXL. I'll probably look to get back on SOXL. I like the indexes better than, the group ETFs that are double or triple better than individual stocks. I have an interest in ARK if Tesla can ever set up again. Tesla's really lagging in the hateful eight, so got to watch that closely. If it breaks down, there's a problem, and that'll put a drag on all the ARK funds. But I have my eye on that. Uber. I'd like to get back on Uber and Airbnb. Looks like the right setup. IoT is my favorite AI story, followed by Path. And I think Pure Storage we'll have to do an expose on at some point, because the explosion in AI creates an unbelievable demand for what this company is doing. And it looks like that pattern's about to break out. So that'll be at the top of the list as well. So those are your ideas: stocks to watch, stocks to buy. Stocks to watch, stocks to buy. And I look forward to seeing all of you on the live desk at 9:30. We'll get that started together. We'll look for our day trades on the S&P. We'll look for entry points into uranium. We'll watch how this market unfolds to see if we want to commit more capital or keep our 30% in U.S. Treasury bills as they are right now, balancing out the portfolio. At the end of the day, you guys have to remember, you can and need to be the smart money. So figure out your strategy, write it down if you have to, put it on a whiteboard, know what you're going to do, and when the bullets start flying, you can just execute. Okay? Have a great day, everybody. See you on the live desk.